Americans no longer want $1,000 car payments anymore. And honestly, everyone knows why. Because a $1,000 car payment used to sound ridiculous. It used to sound like a luxury problem, a rich person problem, a sports car problem, a giant truck problem, something attached to a vehicle that most normal people were not even shopping for. But now that number is not sitting on the edge of the market anymore. It is moving toward the middle. According to Edmunds, in the first quarter of 2026, 20% of financed new car buyers committed to monthly payments of $1,000 or more. Not 2%, not 5%, 1 out of every 5 financed new car buyers. And that is where the story gets uncomfortable. Because at the same time, the auto industry can still point to sales. Dealerships can still point to approvals. Lenders can still point to people making payments. Manufacturers can still say Americans want bigger vehicles, better technology, and higher trims. So on paper, the market looks alive. But inside millions of households, the feeling is completely different. Because the car may be in the driveway, but the breathing room is gone. The payment clears, then the insurance bill hits, then gas, then tires, then registration, then repairs, then the credit card balance that never goes down, then the savings account that never grows. So there is a strange disconnect in the American car market right now. The data says people are still buying, but the buyer feels like the deal stopped making sense. And both of those things can be true. The industry is still selling vehicles, and the average buyer is getting financially squeezed by them. The problem is that the American car market looks very different depending on which side of the desk you are sitting on. If you are the dealership, a $1,000 payment is a closed deal. If you are the lender, it's an approved loan. If you are the manufacturer, it's another unit sold. But if you are the buyer, it's a bill that shows up every single month before life even starts. And that's the part nobody wants to say out loud. The car market did not just become expensive, it became organized around making expensive feel normal. So the real question is not whether Americans still need cars. Of course they do. Most of America is built around driving. People need cars to get to work, to take kids to school, to buy groceries, to go to the doctor, to live a normal life. The real question is this: how did normal transportation become something that can take $1,000 a month before insurance, fuel, and repairs? To answer that, you have to follow the payment trail. So that's exactly what we're going to do. Start with the price. According to Kelley Blue Book, the average new vehicle buyer paid about $49,222 in May 2026. That's not the average luxury car. That's not the average dream car. That's the average new vehicle. And the average sticker price was even higher, around $51,595. So when people say, just don't buy an expensive car, that advice sounds good until you look at what the market is calling normal. A mid-size SUV averaged just over $50,000. A full-size pickup averaged more than $66,000. Even if a buyer isn't trying to be flashy, many of the vehicles Americans actually want or need are sitting in price ranges that used to feel like luxury territory. And this is how the payment problem begins. Because most people don't walk into a dealership thinking, I want to borrow $45,000. They walk in thinking, I need a reliable car. They're tired of repairs. They're tired of worrying whether the old car will start. They're tired of check engine lights. They're tired of feeling behind. They're tired of watching every other person on the road drive something newer. And once they step inside the dealership, the conversation changes. The big number disappears. The small number takes over. The salesperson doesn't need to make $50,000 feel cheap. They only need to make the monthly payment feel possible. That's the trick, because $50,000 sounds serious, $60,000 sounds crazy, $70,000 sounds irresponsible, but $1,000 a month? That sounds painful but survivable. That sounds like something future you can deal with. And once future you enters the conversation, the dealership has already won. Because future you is always richer. Future you always has more money. Future you always figures it out. Future you is the person who gets stuck with the bill. Now look at the financing data. Edmunds reported that the average monthly payment for a financed new vehicle reached $773 in Q1 2026. The average amount financed hit a record of $43,899. The average loan term was just over 70 months, and 84-month or longer loans made up 22.9% of financed new car purchases. That means nearly 1 in 4 financed new car buyers were stretching the loan to 7 years or more. This is what affordability pressure looks like. Not people refusing cars completely, people stretching everything to make the payment fit. Less money down, longer terms, bigger loans, bigger balances, and a monthly payment that looks manageable only because the pain has been spread across most of a decade. A 7-year car loan doesn't mean the car became affordable. It means the buyer needed 7 years to make the price look possible. That's a very different thing. And once you understand that, the $1,000 car payment stops looking like a personal failure. It starts looking like the natural outcome of a broken pricing system. Because if the average payment is already around $773, it doesn't take much to cross $1,000. A larger SUV, a pickup truck, a higher trim, a weaker down payment, a higher APR, a trade-in with negative equity, a few dealer add-ons, a warranty, taxes, and fees. And suddenly, what started as a normal car purchase becomes a 4-digit monthly obligation. But here's what almost nobody calculates in the dealership. A $1,000 car payment is not the cost of the car. It's only the entrance fee. Because the payment doesn't include insurance, it doesn't include gas, it doesn't include maintenance, it doesn't include tires, it doesn't include registration, it doesn't include repairs, and it definitely doesn't include the stress of knowing that one bad month can wreck the entire budget. So let's bring the number down to ground level. A $1,000 monthly payment is $12,000 a year, before anything else. Now add full coverage. For a newer vehicle, that can be a few $100s a month depending on the driver, location, credit profile, and vehicle. Now add fuel, now add maintenance, now add tires, now add registration, now add repairs that are no longer simple because modern vehicles are basically rolling computers with sensors, cameras, screens, software, and electronic systems everywhere. So a $1,000 payment can quietly become a $1,400 or $1,500 monthly ownership cost. Payment, $1,000. Insurance, $250. Fuel, $200. Maintenance, tires, registration, $150. Real monthly cost, $1,600. And that's the number people actually feel. Not the advertised number, not the approved number, not the number the salesperson circled on the paper. The real number. The number that leaves the bank account every month. Now compare that to income. A $1,000 monthly payment is $12,000 a year. If someone wanted that payment to stay around 10% of gross income, they would need to earn about $120,000 a year. But if the full ownership cost is closer to $1,500 a month, that's $18,000 a year. To keep that around 10% of gross income, now you're looking at about $180,000 a year. And this is where the market starts to feel insane, because the dealership may treat a $1,000 payment like it's normal, but the income needed to comfortably carry it is not normal. So if someone makes $60,000, $70,000, or $80,000 a year and gets approved for a 4-digit car payment, that doesn't mean they can afford the car. It means someone found a way to structure the loan. Those are not the same thing. Approval doesn't mean affordability. Approval means the lender believes it can collect from you. That's all. The lender is not checking whether you can build wealth. The lender is not checking whether you can sleep at night. The lender is not checking whether your kid needs braces, your rent goes up, your insurance renews higher, or your emergency fund is empty. The lender is checking whether the payment can be pulled from your future income, and that's a much lower standard than this car fits your life. This is why a $1,000 car payment feels so different from other bills. They don't just take money, they take flexibility, they take options, they take your ability to say no. They make it harder to leave a bad job, harder to build an emergency fund, harder to pay off credit cards, harder to save for a house, harder to invest, harder to feel like your paycheck belongs to you. And that is why the pushback is happening now. Not because Americans suddenly stopped needing cars, not because everyone became financially perfect overnight, but because the payment finally got big enough to expose the whole system. For years, the car market trained buyers to ignore the total price and focus on one question: can you handle the monthly payment? But that question is too small, because a payment can fit on paper and still damage your life in reality. It can fit inside a lender's approval formula and still leave you with no emergency fund. It can clear every month and still keep your credit cards alive. It can look normal to the dealership and still feel insane inside your bank account. That is the difference between making the payment and affording the car. Making the payment means the money left your account. Affording the car means your life still works after the money leaves. And a lot of $1,000 car payments fail that test. So maybe Americans are not rejecting cars. Maybe they are rejecting the idea that normal transportation should require luxury-level sacrifice. Because when a car payment starts looking like rent, people notice. When insurance, fuel, repairs, and interest stack on top, people notice. And when the car in the driveway starts owning more of the paycheck than the person who earned it, people finally start asking the obvious question: is this actually worth it? That is why $1,000 car payments are becoming the breaking point. The payment is not the full story. The approval is not proof, and normal does not always mean affordable. Because if a $1,000 car payment leaves you with no savings, no margin, and no way to handle life, then it's not transportation. It's a warning sign sitting in the driveway. What is the absolute most you would pay per month for a car in 2026? And do you think $1,000 car payments are becoming normal or completely insane? Tell me in the comments.